Okay, this video I just want to cover the stop loss and take profit rules. This concept can work on any time frame, any currency pair, and you're just looking for certain patterns. So let me actually look at the bounce trade. What you're looking for in a bounce trade is looking at support resistance, and you can see that is acted in this general area for it to reverse. So here's your resistance. You can see that the market coming up. You can either look for a closing price against the actual resistance level. So that would be your entry point right here, your stop loss above here, and then you trade down to previous support resistance that you can identify on the left-hand side. And you can protect profits as it goes along. So again, the support resistance is not an exact line itself. It's a general area that the market struggles in. Okay, so in this general area here, we can see that it struggled there and struggled right there. So in the future, what we're looking for is price to react at these areas. And here we have an engulfing pattern. So when price got there, you can look for either a reversal candlestick pattern. Here, the closing price did not go above this area, or there was not a strong enough wick. But if you look at this area here, this was a very strong close with a body. So you would have your stop loss behind here. Your entry point would be right there, and you can look at targets as previous support and resistance. So you can see that there was resistance here. Or if you want to be aggressive profit, it would be up here. So here we can see that we've taken profits right there. Again, so here with the bounce trade, we're looking for support resistance. If you can identify that this was resistance, then again, you're looking for a closing price or reason for it to show signs of weakness based on the wicks. Entry point right there, stop loss above this wick high, and then take profit back down to support right around this general area. Okay, same thing on the bottom. Look at how the market reacted in this general area. So if we want to be aggressive, you hit it at the price, looking at the wick low as your stop loss behind you, or you can wait for this candlestick pattern as your entry point. Stop loss behind here, take profit at the previous resistance. Same thing on the top, downward pressure candlestick, a closing price against that area here, went a little lower, entry point right there, stop loss right there, take profit at the previous support level. So you can see that that methodology works. There's ones that you may take profits a little earlier. Again, it depends on what kind of a time frame you're looking at. Here we had a trade that you could take profits, but this was another opportunity that did work out on the bounce trade. So those are some rules of the bounce trade as far as the support resistance levels. Let's look at the trend line bounce trades and how they work. So a trend line is just a diagonal line, and you're looking at price to bounce off of it. You want at least 2 points of respect, either by wicks or bodies. So here we have a wick, a body, and then wick. So when the price came to the actual trend line, either you're looking for it to touch the trend line as your entry point, stop loss behind the last wick low, and then trend back up to resistance. So there was one opportunity there. Or you can look for a closing candle against the trend line. So here's your entry point right there, stop loss behind here, and again taking profits at the resistance level. Here, entry point, you can wait for this long wick coming upwards. That could be your entry candlestick, or even this candle here. Stop loss behind this wick low. Again, your take profit at the resistance level. So these trend lines, they appear, but I want to show you some ones that don't work out so you have a better idea of it, to know that what to look for. So here's a support. You can see those wicking areas. You can enter at the touch of the line, or wait for it to close against the line. So that was your entry point there. Stop loss right there. Take profit at previous support resistance based on history. Okay, so one that doesn't work out, I'll just show you. Here's your resistance, resistance. Here you can see that the trend line there was a closing price against it, and then here the trade didn't work out. Okay, so that's just an idea that the bounce just giving you small stop losses and big take profits. But here on this scenario, we can see that we have two bouncing price. We have 1 point, 2 points. Here's your bounce. Either you can take it at the bouncing price, knowing that this was resistance and this was acting as support, or you can wait for this closing candle like this, showing there's a long wick. Your stop loss would be behind that wick. Take profits at previous support resistance. So you can see that there's a big take profit and small stop loss. Now with breakout trades, like the break and kind of identifying the breakout is you're waiting for a close of the candle beyond a certain price. So let me actually look at support resistance breakout trades and some of the rules that go behind it. So you can see there's resistance here, okay, and then here's your breakout candle. Your entry point would be right here. Your stop loss would be behind this wick low or this swing point here, and then take profits at previous support resistance. Okay. Again, the break here broke out, and you would have got stopped out on this trade right here. But here, again, what you're looking for is a break and a swing point high as your stop loss, and then your take profit at support resistance. So again, you're looking for a closing candle beyond that price. Here's your breakout, your entry point, stop loss behind the swing low, take profit at the previous support resistance level. Okay, so one thing to consider is some people don't like the actual breakout because there may be a lot more downtime on the actual trade. So what they look for is the retest. And so looking at this scenario here, we had a breakout. We can see that we can wait for a candlestick closing in the favor of the trend, going in the direction that you're expecting it to go to. So again, that was your entry point right there. Or simply looking for the retest of the breakout. So here we have the break, and here's our entry point based on the engulfing pattern. Stop loss behind the wick low, and again taking profits at the previous support resistance level. So it may give you a better price. Same thing here, we have the break. So if you didn't want to take the break, you can look for the retest, it to come back to touch the line that it broke out of. Or you can simply wait for the reversal candlestick pattern in the favor of the breakout. That was your entry point. Your stop loss would be above the actual candlestick pattern, and then take profits at the previous support and resistance level. Trend lines work the same way as far as the breakout is concerned. Let me kind of show you. Deleting these lines here. So again, with trend lines, they're diagonal, and some people don't like that entry point like this because again, it's pulling back a pretty good distance. So you can either enter based on it coming towards that support resistance level or the trend line, the touch of the trend line, or previous support breakout here. So your entry point could be at the trend line here, or you can simply wait for the entry point for the close against this closing candle here. And your stop loss would be above this pattern here, and then your take profit would be at the previous support resistance level, like so. Now certain trend lines you may take profits a little earlier, so you have support resistance or trend lines like this, like that. And we may take profits before the support resistance level. So we have support here, may act as resistance. There's a trend line break, so some people don't like that because it's going to pull back. So you can wait for it to come back to the support and resistance level right around here, or you have your stop loss behind the swing low. You can wait for this pattern here, the retest of the trend line. So if you can see the wicks right here, it would actually be the touch of the line. So here's your resistance, and here's your wick. So you could actually touch the line for your entry point. If that's the case, then the stop loss would be behind this wick low here. If you're actually waiting for this engulfing pattern or the closing against that and continue moving upwards, expecting the trend line to break towards another trend, then that would be your entry point right here. Stop loss behind this wick low, and then take profits at the previous support resistance level that you can identify on your left hand side. Again, same thing with the trend lines. Some you may take profits if it's going against the major trend. It may only come down 38%, but if it's going back into the major trend, it may proceed further than the support resistance level. So those are some ways to look at the breakout trade and the stop loss rules and take profit rules, and I hope they can help you benefit from these low risk and high potential trades. Thank you very much.